Hi, Tori Agler with McIlvaney Precious Metals with your client monthly recap. It's great to have worked with many of you and at least spoken with many of you this month as our volatility continues. I would call it kind of a summer of chopping sideways. It does look like we've put in the low for the summer, which is oftentimes June and July. But not only that, the price action has sort of validated that point. So I'm going to share screen with you here a little bit, show you some images as I tend to do. And what I want to start with just is the gold price in a really strong July. It finished up 5.1%. So this is a chart of the entire month. And you'll see we really ran in the first 2 weeks, hitting an all-time high in gold of around $2,483. We did have quite a pullback to around 2350, and then we came back up about another $100, closed the month at 2,447, which is very bullish activity. Bullish meaning good for future climbs, and the expectations are the same. And the nice thing too, 6 straight months basically of higher closing values. So, since the low in February, we have climbed and put in a higher monthly close every month since then. So that's really exciting. And silver is no exception when it comes to the popularity and the volatility, but where the exception does lie is in its performance. So the white metals in general did not follow suit with gold, and I'll get into a little bit as to why that's the case right now. But you'll see here from the start of the month to the end of the month, relatively flat. In fact, it ended up down 0.5%, which is negligible. If anything, I call that flat. And so what we did have is a little bit of a rally from that low that we had put in just at the last bit of the week and the close of the month. And what has also happened because of this big decline without the same rally that gold had, the gold to silver ratio increased, and I'll get into that a little bit. But I want to show you this image on silver. You'll see this sort of downward trend, this channel with these blue lines. What we're looking at there is we're just showing you that silver's kind of in a bearish pattern. Bearish meaning that it's, in a down sort of a structured pattern. And what we see after we put in highs on these cycles, so back in May when we topped out at 3250, we really haven't been able to recover and touch that again. We're putting in lower highs each time. And so don't know where that's going to be, but we did break through that channel to the downside in July. We did close out above it. We closed right at 29, like $28.99. And unfortunately, that didn't hold on the first day of August, but for the sake of the end of the month, it did. And that 382 Fibonacci, this big, bold black line, is a support level. Okay, and that's going to be right around 2860. And lo and behold, that's kind of where we are now. And we'll see if that's able to hold as a correction point when we come back up towards the ceiling. What we really need is a break above this blue upper trend line. And that would be a little bit more exciting. Platinum actually ended up down about 4% or 2%, I'm sorry. The platinum decline here, you'll see that not a whole lot of action. I mean, the 2%, I mean, there is a whole lot of action, but not a whole lot of change from the start to the finish. So that 2% decline is following that end of the month incline, or the little bit of a rebound, just like what we saw in silver. Palladium was the big loser. Palladium was down 4% on the month. You'll see opening up right around 975 or so and closing down around 928. So it continues this bearish trend that's going back for many, many months, actually. And we've been steering clear of the palladium, and we are watching platinum. Platinum, I encourage you to stay the course on, because it's going to be a great move in your portfolio. As soon as it gets to just equal price with gold, we'll be moving it to gold. Or if palladium continues its decline like this and becomes substantially less than platinum, we may move platinum into palladium per our ratio trading strategies. So I mentioned that the gold-silver ratio had climbed. Here you see we closed the month at 84 on the ratio. We got as high as 86.5 towards the very tail end of the month, the last couple of trading days. And that gold to silver ratio, again, just take the gold price, divide by silver. The higher that is, the more overvalued compared to silver gold is, or the more undervalued silver is compared to gold. And so that just means the higher that we get here, the more indicated it is to add to silver ounces if you're into the compounding ounce strategy, into the ratio trade. All right, so we're excited about this, although I would much rather see it come down into the 60s. That 50-year average is closer to 62 to 1. The more recent 25-year average, even 65 to 1. So we're still well above, 20 points above that long-term average, looking for that opportunity. Some of the stories being told by the US dollar index, you'll see here, we've got this sideways chopping also in the US dollar index. And this is just an indication of relative strength of the US dollar versus a basket of other currencies. So we're right in the middle of this channel, right around 104. It's kind of narrowing, it's tightening. And what that tells us is at some point we're going to break out. And my suspicion is it would break to the downside, because if they do cut rates, that's weak for the dollar, and that would cause a down turn in the dollar index, which would cause equities and the metals to rally. So what are the other key fundamentals? All right, we've got a lot of geopolitical conflict and instability in July, from the assassination attempt to the current president not running for re-election. So that's certainly domestic political uncertainty. Okay, the geopolitical is the continued conflict in the Middle East and Russia and Ukraine, and increased tensions in the Asian Pacific region. So all eyes are on that. And that's really what gold is doing, is it's telling you that there's some geopolitical concerns out there. And just even yesterday and the day before, right at the close of the month, we've had a couple major players in the Middle East leadership that have been assassinated, and that's adding to instability and certainly concerns for retaliation. We've also had continued spending, 762 billion in expected debt in this quarter. That's incredible. Remember, the United States ends its fiscal quarter at the end of September. So even though it's the third quarter of a calendar year, it's the fourth quarter of the fiscal year, and we're on pace to exceed $3 trillion in increased debt over the course of a year, with that type of spending going on in Washington. Again, the US dollar index chopping sideways. Gold is very sensitive to the US dollar. It's the money metal. Silver is more of a speculative investment play, just like platinum and palladium are. We love those for the opportunity that they present to add to your gold ounces later at a discount when they outperform, but it's obviously a little bit early now. Gold is carrying the torch for the precious metals portfolios. We have economic stagflation despite better job numbers and some other things going on, but unfortunately, those aren't good enough, and that really leads to the Federal Reserve policies. The Federal Reserve policies are such that they're looking now at a rate cut in September. They did not cut rates in July again in the last week of the month, and that wasn't expected. That was about a 6.5 to 7% chance, but there's about an 85% chance of them seeing a cut in the Fed lending rate, in the interest rates, if the economic and inflationary numbers are supportive of that. So anyway, that's your brief July recap. Please give me a call if you've got any questions. It's always best to walk through your own portfolio with you, and anytime you have the opportunity just to touch base. If you want a portfolio update, happy to send that to you. We can email it to you as an Excel spreadsheet anytime that you need it. Please be in touch. Don't be a stranger. And just know that we're continually grateful for your trust, your business, and the opportunity to keep in touch. Thank you so much. God bless.